presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Pete in Long Island. Hey, Pete, what's going on?
Hey, Tom. Good evening, and I want to give you a big thank you. Last night I called for your advice, and you gave me such wonderful and correct information. If you remember, I was short 3 gold stocks,
yes.
NEM, AU, and AEM.
Right.
And based on your opinion, you've been right on the mark with this. Boy, it was wonderful, Tom. I got to be honest with you. It's unbelievable what you're doing for your radio listeners.
Oh, I appreciate the call, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, a safe day. Let's make it a great night, folks. Let's take a look at one of Believe. This is a new deck I have, and it's awesome, folks. It's Believe. Okay, so what's the quote today? Be strong, go with your heart, and believe in miracles because anything can happen. That was by Marlo Giordano. Market-wise, let's take a look at it out here. We had the Dow up 19, NASDAQ down 13, S&P's up 2.5, gold contract down $1.80, trading at $1,294 an ounce. Silver up 2 pennies at $19.54 an ounce. Platinum up $17 at $1,454 an ounce. Copper down 2 pennies at $3.14 a pound. Light sweet crude up $1.27 at 101.86. Bonds. You cannot keep bonds down, folks. These bonds want to go to the moon. You have the 10-year up 12 ticks at 125.04. The 30-year up 22 ticks at 136.01. They're going a lot further up. Yields are going to come down dramatically. I suspect what that's all about is that we're going to have this S&P. I tested it today. We'll go through that, but the S&P is going south. King dollar up 230 ticks, trading at 80.19. You had the euro down 55 at 137, and the yen at up 15 at 102.27. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Oh, baby, I'll tell you. So, we get to a price point today of 1902.17. We close out at 1897.65, and the April 4th high, folks, was 1897.28. You did 598 million shares versus the April 4th high, which was 781, and a true test would be a close under the 0.28, and we're at 6.5. Bottom line, I suspect that this is the high, though. It was waiting to test this area. It kept basically getting up into it, and we're talking about getting up into it, going all the way back to the 9th of April. It's been trying to do that for a full month. It did it. You know, a true test, of course, that has to close under the 2.8, and it didn't. It's at 0.65, which is, 32 100ths over it. We take a look at the SPY. You have the SPY that's higher also. So when you do have higher, you can get higher. My take is, though, that this is it. So, SPY. What do we do in the SPY? SPY out here today, we did 65 million shares. That's going into 169 million shares. We got to a price point of 190.42. We are at over the high, which is 189.70. We go into the NASDAQ composite. The composite and the small caps yesterday go topside, but guess what? If you own The Art of Time in the Trade, the Ultimate Trading Mastery System, my book, you know that the market talks, walks, and squawks, and what do? They talk, walk, and squawk at swing points. Guess what? NASDAQ couldn't get to the swing point. The swing point on the NASDAQ, folks, is 4185. We got to 4155 and couldn't handle that, which is pretty intense, actually. It should have been able to handle that real easy. Why? Because yesterday had some juice in the market. It was still light volume yesterday, but you did have some juice. We take a look at that. In the NASDAQ, yesterday had at 1.8. Today we had 1.8. NASDAQ is, yeah, I'll pull the 3 Qs up. I expect the NASDAQ the same deal. 3 Qs, we had 26 million shares. The 26 million shares was going into 48 million shares and going into 131 million shares. Check that out. 26 million going into 131 million. You know what? You don't even need technical analysis to figure that one out, folks, okay? There's no one in the store and someone's paying up for the product. By the end of the day, they weren't paying up for the product. We got to a price point of 88.61. You closed at 88.29. And bottom line, I suspect it's going to start making its way back down to the lower lows. We go take a look at the small caps. Small caps yesterday. Small caps absolutely had some juice in them yesterday. Guess what? Gave it right back. And this is where these swing points are so crucial. So the small caps, folks, and this is ICE. It should have been, so the small caps and the NASDAQ, first off, should have been able to get up to ICE, and they couldn't, okay? That is an anemic dead cat bounce. That cat has been dead for a long time. So what do the small caps do? Small caps over here get to a price point today of 112.85. Give it up ASAP. Small caps are basically building cause to get into this 107. I expect what we're going to see is that it's not only going to get a 107, going to run down to that 90 price point. Gold contract. What we have with gold is this. Gold out here traded sideways, 116,000 contracts. We are at 1293 right now, and she had got into a low yesterday, rejected lower price, had lighter volume. She's building cause, folks, to get into this 1331 area. Silver, what we have with the silver market, SIN4, what we have with silver is this. Silver had wide price spread yesterday, accelerated volume. Silver is absolutely set up better than gold is right now. I like this setup. Silver, and I don't know, well, we'll go through the divergence that's in there. Silver right now, you're at 1950. She's going to be making a run for this 20.60. Now, bonds, man, oh man, let me tell you something. 10-year bond. We take a look at the 10-year first. This is what you have. 10-year does 998,000 contracts today. You're right at the highs once again. This baby, folks, yeah, we said bonds, Mark. We're growling and prowling out here with these bonds. They're at 125.03. And this baby, I'm telling you, folks, when you go sideways like this and you do not back away from highs, okay, this baby wants to take off and wants to get into the 129 level. And that's a move and a half. And if, in fact, this is an A to B equals C to D ABC structure on the way up, which I think it is, what you're going to see, you got to remember something. The A to B move is a straight line move. The B to C move is sideways consolidation, what we've had now since February 3rd. And the C to D move is, bang, straight line. They don't let you in. That's what's going to happen here. And the catalyst I expect is when the S&Ps just give it up. 30-year bond, the 30-year bond's already done it. The 30-year bond right now we're at 136. The B point on the 30-year was 133. The 30-year just blew it away. In fact, I can make the case that the 30-year is on a ABC structure within an ABC structure, which just makes it that much stronger. When we went topside on the 2nd of May, that was a monster move, folks, okay? You came in with 586,000 contracts in the 30-year. Bottom line, 30 years going topside. Now, what's so unique about this whole deal is that what we had is that we had the dollar index reject lower price 4 trading days ago, and then go topside with conviction. I mean conviction. Conviction, follow through, all of the above. The dollar right now is at 80.19, and she's making a run for 81.65. When you wrap that up, what that is telling me is this. The dollar, gold, and silver do want to go. Inside the actual equity market, this is what you have, folks. Great point. What our targets are saying, people need dollars to buy those bonds, and that's a fact. There it is. That's a fact. Anywhere in the world, folks, you want U.S. bonds, guess what? You have to have a U.S. dollar to buy U.S. bonds. It's a beautiful thing. Now, if you haven't test drove the gold report yet, folks, you can come over to our website at TFNN. You can test drive it 30 days, absolutely free. If you're interested in the metal market, go do it now, folks. Because I will tell you this. The divergence that is in the metal market, okay? The gold report came out today. And the last couple, reports, it's once a week, okay? The last couple reports, I could see the difference in the divergence. Bottom line, if you want to really understand that divergence, go test drive it. Costs you nothing. Go test drive the gold report, and you're going to see what the divergence is. The divergence has real clarity now, and it's going to be wild what we're going to see inside that metals market. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. We have the Dow Industrials finish up 19, NASDAQ down 13, S&P's flat. Well, up 1 point. We're going to be right back, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details, and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You take a look at that Fossil, F-O-S-L. Fossil closed at $111. That little baby right now is trading at 107. She is going to do another ABC structure on the way down. And this is what you have. Fossil, this is the clothing company, folks. And if we take a look at the, let's see what they're saying here. So number-wise, oh, man, they really blew it. Okay, so the estimate is $1.16. They're talking about 90 to 97 cents. When you take a look at this chart's a mess, period, meaning on the way down dramatically. This stock has come down off a high that was generated in November of 134. You're at 107 right now. She's going to go after this lower swing point of 105.24. The way this is set up is that she's going to run down to this 95 area. That's going to be quite a hit. Now, folks, let's go over to our man, Mr. Basil Chapman at the Chapman Wave. And don't forget, each and every trading day, 11 to 12 Eastern Standard Time, you can call in, talk to Basil. He has his own program right here at TFNN. You can also test drive his newsletter, The Opening Call. The way you do that, go to TFNN, go to newsletters, you go to trading newsletters, you see The Opening Call right there. You can test drive that 2 weeks absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
Very good. Thank you.
Cool. So let's see. What are we looking at up here? The Dow. We're looking at the Dow.
You were looking at the Dow, and there were a couple of things that we've been talking about. One is that I anticipated that there should be a leg D in the Dow daily chart. Turns out we're in a leg E. We've extended in what I call it's a rising wedge formation. From that, you remember the day I was talking about the exact unchanged level that the Dow made? And the last time it did that was back December of 2010. So I'd said that that's probably a significant move, and we should have a kind of a seesaw battle between going a little bit above and a little bit below. So what happened is we went exactly that, above and below, and we retested the 16,631 previous half, April the 4th. And now we've broken out and we've gone to 16,735 in the Dow, and that's leg E. This is where, for my subscribers, we invariably start to look at, is this where we need to start looking at either what I call insurance, because D, E, or F is where you start to get the greatest declines in the Chapman wave. So we've got to be a little bit careful here. Well, it turns out that a couple of things happened this past week. The S&P and the Dow, the New York Stock Exchange, have all made weekly new all-time highs. In my work, that says that the weekly chart of the S&P is in leg D. The Dow, INDU, is in leg C, with the implication that it should get to a D, because that's what normally happens. And what's really important about this is there's just a slight divergence in the daily charts. And what has happened because of that, the implication that I've said for our subscribers, because we have a number of long positions, they've done very nicely, and they're all in leg D or E. So this is a period where I have to become somewhat cautious. The very interesting thing is my scenario was that just before options expiration Friday, and that could take us to Thursday if tomorrow is a weak session with no new high in the S&P. Why do I mention the S&P? Because the S&P is in leg C, and invariably you get to a D in a buy mode, and it's in a buy mode with the stochastic acting well and the MACD acting well. So I'm anticipating that there'll be some kind of a pullback, and then there'll be a modest new high. And then we've got to be somewhat careful. The weekly charts are saying, in this particular format that I'm looking at in the Chapman wave, we could have a pullback, but not the pullback. We'd still probably have to go to a higher high in about 2 weeks' time in the S&P and the Dow and the NYU, the New York Stock Exchange, before I can get all of them in sync, at least in Ds, in the weekly chart. So to sum it up, we're getting to I think some kind of a consolidation. If there's a rotational correction and some of these really beaten down momentum stocks are able to have some kind of a rally, that would also include the biotechs, although it's looking tough. Some of them are not acting very well at all. If that is possible, then we could have what I call a high-level consolidation for about 5 to 7 or maybe 9 sessions, and then somewhere towards the holiday weekend, at the end of the month, that's where we make a more significant top. And I'm going to be watching this really closely because here we are. You remember I had spoken to you about Staples, the stock that we're in. It's done really nicely. It's gone to a very strong leg E. It broke in the daily chart. It broke above the gap, big gap between 13.22 and what was that? I think it was 12 and 12.01. And now it's trading at 13.48. It's up against some kind of resistance. I've got a target, left side, right side price time match, which says somewhere in the next, by early next week, we've got to see whether it's able to retest the one of the important highs of 1377. And the weekly chart is in a very strong leg B. I'm calling it just possibly a turnaround situation like we had in Rite Aid, but more likely I have to treat it first as a very good bounce that is trying to challenge that terrible candle of the 7th of March where it opened at 1351, went to 1366 and then dropped to 11.16. So it's done that very nicely. The monthly chart shows that it's attempting a bounce. So we have a number of stocks like this. We're long an auto stock, an airline. They've done very nicely, but as I say, they're getting to the point where I've got to be thinking about some kind of protection for the longs, and we are probably going to start implementing some shorts right here. So it's a very interesting thing. So my subscribers, and actually what I have done in the my Tiger Technicians Hour for the past couple of days, I've been explaining what we're looking at, why we're looking at it, and at the same time we're also looking at the volatility index, which is really interesting because the volatility index, you were talking about the dollar. If you put this all together with bonds and the volatility index in a weekly basis has been 11s, has been where you've got a really good bounce, and it's gone from the 1188 level to 1213. So I'm watching the VIX very closely, and you spoke about the dollar. I also think the dollar's showing a lot of strength. This is the first real strength that I've seen in the dollar for some time. So that might make the cyclicals, the international stocks, a little bit weaker if the dollar continues to rally. So this is a time for a little caution as far as I'm concerned.
You know, Basil, when you look at the S&P on the monthly, right?
Yes.
You have the start at 1074, right?
Yes.
Why isn't it at the bottom of 666?
Oh, I'm sorry. Are you looking at the monthly chart?
Yes.
So the 666.79 was the low bar, which started the peak A to B to C to D, which concluded in May of 2011. Then there was a sharp drop, and the next rally started from October 2011. And now we're still in leg D.
I see. So even if there's a sharp drop in it, but it didn't get under that swing point, you restart, right?
Right.
Okay, cool. Listen, folks, you can get over to our website at TFNN. You can test drive Basil's newsletter right now. Go to newsletters, opening call. Basil, thanks so much, man.
Thank you, Tom. Have a great
one. Have a safe one. We'll come right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had American Express down 57. You had Oxy up $1.10. Big Mac was up 67 cents. U.S. was up 46. You had Walmart flat. And if we go over, let's go take a look at that oil market. CLM4. So let's take a look. Oil had some juice inside this today. 218,000 contracts. You go up $1.29. She's going to need more than that, but she's going to make her way up to this. So she's into 101.55. That says the high is game again. Amazing. So 104.10 is game again. That's how that shakes out. You know, you got over the 100.76. You're at 101.88. we'll see what she can do if she can handle that high when she gets up into that level. One of our tigers, we were talking about the NASDAQ composite and the NDX 100, okay? So the NDX 100 did fail. When you take a look at the correlation, folks, what we did, and this is where, see, the NDX 100 and the Russell both failed. You had the NDX 100 get into the trading of the 24th of April. We got to a price point out here of 36.24. The high of the 24th of April was 36.18. We did 1.8 billion today versus 2.1 billion. Bottom line, that's a failure. Now, that's not even taking the highest volume down day. And, of course, that was the 4th. The thing that's amazing about both the NASDAQ composite or the NDX 100 and the Russell and the NASDAQ composite is that they couldn't get a decent bounce going. That's zero follow-through. They should have been able to get up to at least ice. We'll see how this shakes out. Of course, you only have, today's Tuesday, right? Yeah, so you got plenty of time, meaning for a pullback. You get Wednesday, Thursday, Friday. You remember something, we're into summer trading right now. So Friday is going to be slow, Monday is going to be slow. And let's go overseas for a second, because overseas what we did have is this. You had the FTSE closed at highs. Now the FTSE was up 21 bucks. We closed at 68.73. The last high that was generated up there was 68.67. That high was generated on the 21st of January. We got back up to 68.65, 2 points away from it on the 24th, and then it fell apart. It went from 6,800 straight down to 64.92. The DAX. Okay, well, here, let's go to the DAX in Germany. DAX in Germany. Okay, so DAX in Germany, different ball game. We got to 97.83, and it gave up just about 40% of its point structure. It closed at 97.54. Now, the high in Germany has been 97.94. And the last high, we'll see what we have here. The DAX likes trading like the NASDAQ, folks, okay? The level that it's into right now, I won't get the volume characteristic until about 8 o'clock tonight, but we're going into 131 million shares. We only did 87 yesterday. I suspect today we probably did less than 87. If the DAX tomorrow morning just opens down, DAX closed at 97.54, you get the DAX to open like 20, 30 points lower, guess what? You're going to have a beautiful top up there that matches the top that was made January 17th as well as the 21st. It's going to be wild watching this whole thing shake out, particularly because, here's the bullish and bearish case. The bullish case would be that you made it back up to the highs. I'm going back to the S&P right now. You made it back up to the highs. The cash S&P closed basically 21 hundredths over the high. If you close over the high, guess what? You can go higher. That's your bullish case. Your bearish case is that the test was done today. It was done with 598 million versus 781. And we'll see it right under that number of 1897.28 tomorrow morning. And, now this is the kicker, and you have an expansion of volume as you're going south again. The risk reward up here to basically sell it, which I sold it earlier today, is there. That's my take on it at this particular point. Patience is the name of the game, waiting for it to go all the way back up there. Why? Because we have a high volume, low. I'll put the SPY up here so you can see what's going on here. What we have is this. You did 66 million shares. I'm going to put this back a year, actually, so you can see the correlations. And the correlations are pretty intense. We can go right back to the 184 level, which was January, right? We get the 184. Guess what? You hit the 184 level with 72 million. You come down with 254 million. You make the next high, which is 186, with 74 million. You come down with 167 million. We just made the next high with 66 million. You can see the correlation. The correlation is 254 million on the way down and 172 million on the way down. You're making highs with 66 million. That's not a market that can sustain higher price. That is on the basis of how you're trading down versus how you're trading up. If you want to wrap your head around the channel aspect of it, what you have done is this, is that you tucked right outside of the channel that started all the way down at 157. So that's basically still saying bullish. You broke outside of the channel, meaning we broke in the lower part of the channel 3 separate times since the beginning of January of 2013, or of June, actually a year ago. The first time we broke inside, we only stayed in there for a day. That was October. The next time we stayed in there for 3 days, that was January. The next time we stayed in there for 7 days, and that was just this past April. So we'll see how it handles this channel. The channel itself, folks, is 189.25, and right now we're at 189.96. The small caps, if we take a look at those small caps, the small caps are basically projecting that this baby not only wants to come down, but this would be a real big move down, because you take the 120 at the highs, you take the 108, and you take 14 points off the 108. So what's that? 98? Yeah, it's $94. And the last time we had any juice in this, by the way, is 95.73. That's a normal place for that to correct. It can get to 93. We know it's going to extend itself. The real key is going to be, how do you come off of this level? The small cap has showed that it wants to go south. Well, it has gone south with expanded volume. So we'll see if, in fact, this small cap is a very large ABC structure on the way down. When you put it on a weekly basis, that's exactly what it looks like. If we put the NDX 100, the 3 Qs, on a weekly, same setup, man. The A point is 91.36. Your B is 83. So you're talking about $8. Your C could be today, which gets you an 80 price target. And an 80 price target will bring you all the way back to October of 13. And, volume-wise, basically lines up at that level also. The bond market itself, let's see the 10-year is what the 10-year is running at right now. So the 10-year is 2.609. What I think you're going to see out here probably tomorrow is that the 10-year is going to bust higher, get into the 2.5, and that is going to be a heads-up in an extraordinary way. Because bonds, the amount of movement that is going into the bond market is basically saying that, guess what? Higher bonds like this, and the way the bond market is set up right now, this is, I think, even more important about just them going up. The amount of cause that the 10-year has built is saying that thing is going to be so fast and furious that people are going to be in shock. And if you go back to the 30-year, I remember when this happened in the 30-year, the largest expansion when we went up, folks, okay, was after we had built cause. And what we were doing, we had basically built cause out here. And I'm not talking about the 08 level because, I could make that argument too. We had built cause from 03 to basically 07 and then went topside. And when we had topside, it went to the 143. But that's not the one I'm talking about. What I'm talking about is that how the bonds traded from 08 going all the way over to 11. Because in 08, you can understand bonds going that much faster higher because the 30-year went from 112, up to 143 because the market was crashing. So you can totally understand that. The move in 2011 was different. Now, we were doing a normal correction, but when that bond moved, we moved from 127 to 141, and that was the 2011 correction. That's what I think we're going to see in this move. It's not going to be no crash, okay? But it's going to be a very fast and furious move down, bonds move up. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming in right back. We had the Dow finish up 19, NASDAQ down 13, S&P's up $1.50. We had gold off 220. And, folks, if you'd like to test drive my daily newsletter, the way you do it, go to TFNN, go to newsletters, trading newsletters, the market insights. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You You can't use your smartphone to view Tiger TV. But if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. You want to see a fine coming down the line? This is pretty. This is a heavy one, but it will evidently keep them in business. So you may have heard the last few days. You have BNP Promise. They basically our Justice Department is basically threatened to have a criminal complaint against them, and of course that puts a bank out of business immediately. So now what they're floating coming across here is that they are seeking a $3.5 billion fine to resolve all the federal and state investigations into their dealings with Sudan and Iran. That is one big number. Bottom line is that they're going to have to pay it. You know, it's amazing. It's amazing watching the cat and mouse game here inside the Justice Department and the banking structure. You know, if you go back to the financial disaster in 2007, 2008, depending on how long you have been listening, when we were going through this, I had brought up a couple different times that it would take that long for all these banks to get healthy again before the feds would go after them, and that was the smart way to do it. Why? Because you can't get money out of a rock. That's what it comes down to. The amazing thing, there's no doubt, which is not ethical and not it's crazy, okay, is that it doesn't stop them, and it won't stop them, folks, okay? That's just how the system is set up. It's been set up like that forever. You know, slow them down for 3, 4, 5 years, okay, maybe 7 years. Then what ends up happening, it starts up all over again. Because what does happen, there's no doubt, what does happen is that when you can pay versus going to jail and versus getting out of business, well, you know, the bottom line is that the amount of money that can be made that they don't get caught goes up exponentially. That's just how it goes, you know. And when the amazing thing is that what blows my mind many times is that when I hear folks out there that are basically saying, well, it's not right that the Justice Department is going after the banks. It's like, what are you, crazy? Okay? The bottom line, folks, is that this whole debacle on the way down, you know, if you watch Tiger TV, you know that you're looking at a Bloomberg all the time. And I've mentioned this before, but just for new listeners, let me tell you something. All these loans that were out there are on the platform every single day. You know, during that, when we were going downtown, you could pull them up. Well, you can still pull them up and see how many days late each loan is, where they are. Okay, so that information's all out there. This is just par for the course, and what the financial system hopes for on a continual basis, that you don't get another crash. And of course, we all don't want another. It's not even close, okay? Because the bottom line, the other side of that is that if the Fed did not step in, guess what? We'd all be in tough shape, big time, okay? Because that is something that no one else would take the risk. No one had the money. No one had anything, you know, to bottom line. And it's who holds the bag. In this particular case, what did happen, the Fed held the bag. Guess what? They're all going to make money on it. That's what it comes down to. You know, some of the biggest money has been made actually on the Lehman bankruptcy. The Lehman bankruptcy, when that went BK, which it went BK very quickly, the debt was trading at 12 cents on the dollar. The average debt right now is about 50 to 70 cents on the dollar. There's some of that debt, listen to this, this is sick. There's some of that debt that is trading at 150 cents on the dollar. Yes, you heard that right. You bought debt at 12. Well, the one that's trading right now at 150 cents on the dollar was bought at 27 cents. So it's trading over $1. And why is that? Because what that was all about was debt instruments that were highly leveraged that basically not only came back, but came back in an exponential way because of the fact that interest rates continue to go down. And guess what? There's cash flow in it now. So, there's a few more large fines that are going to come in, and we'll see. Well, here, Credit Suisse is scrambling big time, too. What are they saying? Credit Suisse has eliminated jobs as foreign exchange team as part of an effort to shrink the bank's fixed income. What they're really doing, folks. Okay, at least 6 employees in foreign exchange in the UK and New York are being offered so-called redundancy packages where they are told their jobs are at risk of being cut and given a set period. They're getting out of that business, folks, because that's a fixed business also. And Credit Suisse, as about 6 or other 7 banks, are caught in that LIBOR fixing. And the LIBOR fixing is only starting. That, folks, is only starting, and I suspect that most of us that are listening out here more than likely could get something out of that LIBOR fixing. The reason being is that mortgages, many mortgages, not all mortgages, but many mortgages were based and are based on the LIBOR fixing. So that will basically, it's been going on for 3 years. We probably won't see any court cases for another year, year and a half. It's going to take another 4 or 5 years. But the bottom line is that once they pile up enough bread, that is going to be the next get-go for huge amounts. And that, no doubt, is going to be many sharks fighting sharks out here because the amount in the foreign currency market that has been included and fixed that go into the mortgage market is astronomical, absolutely astronomical. Just going to take years to get down to it, but that's going to happen. We take a look at the gold and silver market out here, and what you have, folks, is this. Gold, no doubt, is building cars for higher price, but silver is at a different ball game. It just isn't a different ballgame. It's going to be intriguing watching this play out. It's the way this is set up right now. It's in the last 12 years, I've only seen this one other time doing the gold report, and the way that it basically played out is silver, got ahead, gold caught up. We'll see if that's in fact what's going to happen in this dynamic, or in fact is there something else that's behind that? Why it seems that most of the silver equities are basically acting much better than the gold equities. That's how this is kind of set up right now. And, we'll see whether it's a supply-demand deal, if it's a change in currency rules, meaning at the CME. It can be many things, but that's the way that this is set up right now when you take a look at both the gold stocks, the silver stocks, and you combine them. It's Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. We had the Dow Industrials finish up 19, NASDAQ down 13, S&P's up $1.50. We had gold at $12.93, silver at $19.54. We're going to be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Rich in Taunton, Mass. Hey, Rich, what's going on?
I just want to let you know that I listen to a bunch of radio shows and financial related, and TFNN has the best stuff, most interesting, even if you don't understand everything about it. It's really good stuff.
Thank you so much, man. I appreciate that. I love the part about not understanding it. No, I know it's a different language. I mean, well, the way I speak is a different language anyway.
Yeah.
Oh, listen, man, I appreciate you listening out there. All you folks, thank you so much, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night. The summer's kicking in, baby. Let's make it a great one. Let's take a look at one of our quotes here. Live in faith that the whole world is on your side, so long as you are true to the best that is inside of you. Christian Larson. Market-wise, let's take a look at it out here. We had the Dow Industrials up 19, NASDAQ down 13, S&P's up $1.50. Gold contract down $2.40, trading at $1,293 an ounce. Silver up 4 pennies at $19.54 an ounce. Platinum, big day for platinum. She was up $16 at $1,453. You had copper down a couple pennies at $3.14 a pound. Light sweet crude up $1.42 at 102.01. She wants to go make a run for the highs. Bonds, Eveready bunnies, big time. 10-year up 12 ticks at 125.06. The 10-year will be entering the 2.5 yield tomorrow, or 2.604 right now. 30-year up 20 at 135.31. And King Dollar on the move once again, up 248 ticks at 80.21. The euro down 55 at 137. And the yen up 15, trading out at 102.27. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay. We got to 1902.17. The high, April 4th high, is 1897.28. So we've been waiting for this test up at these levels. Bottom line, you got up there. You closed out at 1897.45. The high is 1897.28. So you can basically, you can make the, well, it is the case that you get a higher high, even if it is, 28, you're 17/100ths higher. But that means you can go higher. My take, folks, is that this is the high. I did lose the bet, though, with Ilka from Boston. I gotta take her and Arthur and her family to Regina's. It's a beautiful thing, no doubt. I like that. And actually, she's coming down to visit us in Florida. That's a beautiful thing. We'll have to take her to. It's hard to find a Regina's pizza place in Florida, folks. But okay, market-wise, anyway, this is what you have. Got to the high, failed the high. Well, to me, failed the high. We'll see what ends up happening tomorrow morning. If we take a look at the SPY closed over too. What the SPY did, folks, is this. We did 66 million shares. That 66 was going into 169 million. Bottom line, you closed at 189.96. The last high out there was 189.70. NASDAQ Composite. Now, the Composite and the small caps have been the laggards in a huge way. They failed all over the place today. The Composite basically did volume of 1.8 billion, was 1.8 yesterday. She was going into 2.4. Couldn't handle it. She closed down 13. Not that 13's a lot. Russell 2000, which was really surprising also because the Russell has got smacked so heavily. You know, the Russell had gone down from a price point of 1212. You know, we got into a low on Monday of 1,091. That's about, what, 10% down? You had a good day yesterday, but guess what? Gave it right back and never got to a swing point. The Russell, folks, the Russell basically looks to me like it's going to be really, well, the Russell and the Index 100, they're both showing that, guess what? They want to go dramatically lower, not in a small way. When we take a look, and what you will see, so the Russell right now, we're at 1121, and the Russell looks to me like you get 982 on the agenda. That's a big number on the way down. That's a big number. What you will see happen, as I said the last few days, many folks will be getting their statements. They're coming in right now if you get statements by the mail, which many people still do. And they actually will not understand how the Dow Industrials and the S&P is at highs, and, in fact, their statement is not at highs. Something that just came across the tape out here. This is pretty cool. So watch this. But this is where, here, let me read this for you first, because many of you folks have been listening for a long time, and you're going to get familiar with the beginning of this says, but this guy, well, here, let me read it first. This is about why chart watchers are skeptical of the S&P's march to a record. There are soldiers and then there are generals in the stock market, according to Oppenheimer and Company's Ari Walt. And they need to march together for this army to keep winning. The large-cap generals are marching just fine, as shown by the records reached yesterday in the Standard & Poor's 500 Index and the Dow Industrial Average. The soldiers, however, have been leafing around worse than Beetle Bailey for the first 2 months while they've made mad dash to catch up. There's a lot of ground left to cover. The Russell 2000 Index has jumped 3.3% in the past 2 days, yet is still off more than 6% lower than its March record. To Wall, the small-cap bounce will likely just delay and deepen what he sees as an invariable downward correction in the S&P 500. Now, what's so cool about this, folks, is that if you remember our man Joe Granville, okay, Joe is a great guy. He passed away last year. He would come on the air, and it was always talking about the generals and the soldiers. Now, I believe Joe would have said this a little bit differently. He no doubt felt that the Dow was generals, that's for sure. But what he also felt was that high flyers in general, meaning the Amazons of the world, the biotechs, whoever was marching up, well, they already left the battle line. That's how he basically brought this down many times. Both these guys, well, he's saying the same thing, that just in a different way, but it was really cool just reading that, thinking of Joe. We take a look at the small cap. So the small caps the small caps failed. The NASDAQ failed. The S&P did not fail. I'm counting. Well, I went short the S&P. That's the bottom line. We'll see whether when you talk about risk versus reward, it's at a good place. The reason being is that if you break topside with wide price spread, okay, bottom line, you're going to go a lot higher. That's how this comes down. And if I set up a bull-bear scenario with you as to a common sense deal, it's almost that the bullish part would be this, that it's almost too easy that this was just the test and it's going to pull back. Okay, so that would be saying for all you bulls that, yes, it wants to go higher. The bearish part of this goes like this, is that the amount of time that it took to come up and get the test, and there's many folks that thought it wasn't going to test that wanted to short the market, let's put it that way. That correlation there is basically telling me that, guess what? That's what it was waiting to do. That's what it wanted to do. It did it. Now we'll see if, in fact, that was, number one, what it wanted to do, because what we do have is this, is that you have the Dow Industrials at 16,715, and, that's basically $100 over the highs that were generated going all the way back to December. So you can make the argument that if we finish the week here, you can absolutely make the argument, well, and if you'd have to be like a couple $100 over, which would be easy, but you can make that argument, then guess what? You're going to get higher prices. When I go look at the diamonds, if you want to see the correlation, volume correlation, price correlation as to who is in the store and who's not in the store, we put this up on a 2-year basis. What you're going to see is that the last high that was generated out here had 38 million shares. That high was 165.29. We got up to 166, with 31 million shares. 31 was doing the 38. That was the week of April 4th. Last week we did 25 million shares, and thus far this week we've done 8 million. So if we continue to basically trade out like we have, we're going to do 20 million versus the last high out here, which was 31, which didn't hold, versus the 38. So you'd be coming into the high with almost 50% lighter volume. That says we're going south. You stay right there, folks. We'll come right back. We had the Dow up 19, Nasdaq down 13, S&P's up a couple bucks. We're going to be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. And you're going to see tomorrow morning, folks, okay? There's another glitch going on. It was basically coming right into the close out here today. Now, it only affected about 5 or 6 stocks. But, man, whoever got hit, it's going to be, I suspect they're going to break the trades. AOL, folks, went from a price point at 50, let's say at 1540. It was 1549 to be exact, at 3:49 Eastern Time. Traded from 36.91 down to 32.77. And Caterpillar just went the opposite way. What you had with Caterpillar on the same time frame went from 107.21 to 108.21 just to come right back. Neighbors, I think, NB, I think that did it too. 1 second. What's Neighbors? Yeah, well, first let me go to our man. Folks, now let's go over to our man, Mr. Andy Hecht. And don't forget, each and every trading day right here at TFNN, folks, Andy has an outstanding, well, each and every Tuesday and Thursday, right here at TFNN, Andy has an outstanding commodity show, 3 to 4 Eastern Standard Time. You can also come over to our website at TFNN and check out his newsletter. It's the Technomento Commodity Report. That letter, folks, first you go under newsletters, you go into trading newsletters, you can test drive it right here, right now. Now, as you're at the front page of TFNN, what you're going to see, energy opportunities during the summer of 2014. Andy's doing a webinar. That webinar, folks, is going to be June 7th from 9:30 to 11 a.m. You can go to that webinar. It's only $99. It's going to be an outstanding webinar. Check it out on the front page of TFNN.com. Andy Heck, what's going on?
How you doing, Tom?
Doing great, man. You having a good day out there?
Yes, sir.
Cool,
yes,
man.
Sir.
Cool.
So, let's take a look at what we're going to talk about today. Let's talk about silver.
Silver.
First.
Yeah.
I put a chart up. Silver-gold ratio.
Yep.
I think this thing is getting ready to break down. I think we're now at 66.2 to 1. I think we're going to go back to a minimum of 60 to 1. I think you're long silver, short gold here.
Silver is strong, man. It's stronger than gold. The silver equities are stronger than the gold equities. And
yes.
In a large way, too. There's no doubt. So whatever is happening, I had said to the audience earlier, Andy, in 12 years of doing the gold report, I've only seen this happen once. And it was early in 2003. And silver took off, and then gold caught up. It's going to be intriguing to see what the deal is this time. Do you know what I mean?
I mean, if this thing goes back to the long-term average of 55 to 1, it's a monstrous move. Just so you get a feeling. Right now, we're at 1956 on silver. We're at 1295, let's call it, on gold.
Yes.
At 55 to 1. That's a $23.50 silver price. That's $4 above where we are here.
Yeah, no, so, listen, there's something happening, man.
Something's happening.
Yeah.
Something's happening. I have this chart up. It looks like it's turned, and I've been watching it very carefully. It looks like there's good resistance on this relationship at around 67 to 1. We've tried it many times. I think it's going to go the other way. So, like I said, I'm long silver, short gold.
There you go. I like
this
it.
one.
Hey,
so
let's just take this quick call and we'll come right back, okay? You stay right there. We get Frank from Lexington. Hey, Frank, what's going on? Oh, we missed him. Okay, that's all right. Go ahead. I'm sorry.
Sure, I'll call back. All right, so grain. Let's talk about grains a little bit.
Yeah.
The USDA released its WASDE report on the 12th.
Yes.
And basically, as I had said, I thought that all of them would pull back because the USDA looks at these markets with rose-colored glasses.
Yeah.
They don't know what the weather's going to be, but they assume that, everything planted will be harvested.
Yeah.
So, the numbers came out, good, it's going to be a big year for soybeans, a big year for corn, there's going to be plenty of wheat around, but what they're not factoring into is problems with growing wheat in Ukraine, problems with growing wheat in Australia, Canada, maybe the U.S. based on weather. We're going to have some volatility as the weather reports change in these markets here. So, a little bit of a pullback here. Nothing really to do here. The one big thing that's going on in wheat, I'm a little bearish on all of them.
Okay.
The only thing I'm very cautious about is the wheat because of the Ukraine and because the fact that the winter wheat crop is been absolutely torn apart, and that can be seen by the difference between Kansas City wheat and Chicago wheat. It's now $1.15 premium for the Kansas City, which is the hard red winter wheat.
And they've had a monster move, right? I mean, so it's not like they're down. I mean,
No, they've had a big move, but, people are used to corn. Oh, corn's high, it's $8, so we're down at $5.
Okay.
But, if we go back a decade, it was $2. So, yes, they're up.
Yeah.
Over a long period of time, yes, they're all up. Beans are in the teens for a sustained period of time. Soybeans, $14.84.
Yeah.
Down from, we got up to a high of about $15.20. I could see this thing pulling back. And beans are in a huge backwardation. The November soybean contract is trading at around, about $12.18. So that's more than $2.50 lower than the nearby. So, the market assumes that the crop will be good, and that'll put, that's why the price of new crop beans are so low.
This weather deal is no doubt is going to be a big deal.
It's good, and that's why I'm doing this webinar, because I think that it's going to move energy around like crazy, and I think there's some great opportunities. I mean, we're seeing now in natural gas, which is falling like a knife. We were up at 485 last time we talked, and now we're down at 437. Looks like we're going to test 425. I certainly hope we do, because I want to buy some cheap natural gas. Scale down. And I think that that's an opportunity, natural gas, because the inventories remain very low. But, the interesting thing we're seeing here is we're seeing open interest drop along with price, which means that frustrated longs are closing their positions. Some shorts are taking profits. New positions aren't being added. Old positions are being taken off. This is not necessarily bearish longer term, that open interest is going down along with price.
Well, when this morning I'm reading the paper, okay, and, you can argue whatever you want to argue, folks, about global warming, okay, but what you can't argue, as far as I'm concerned, is that NASA come out. So this is NASA. NASA come out with a report last night. And the bottom line is that they're saying that the ice caps that are melting in the Arctic right now, okay, are past the point of no return, So I'm looking at that. I'm thinking of the weather that we already had. And never mind what has caused it, okay? Because, when I look at the world in general, you get the Ice Age, you get all these things. So forget that. What is happening, which is real, is that, guess what? NASA already said they're melting, okay, and it's going to change. It is changing the weather. So then I start thinking about you and the weather and commodities, and it's like, it's heavy business, man.
Oh, it's heavy business. And this El Nino that could be forming could cause, issues when it comes to certain soft commodities here.
We don't even know. That's my point.
We don't know.
It's like,
we don't know.
Oh my.
The water levels could be rising, causing some flooding. In places low sea level.
Scientifically, that is happening. It's going to happen.
Right.
The argument, of course, is that is it carbon or not carbon? Forget that whole argument, folks. It's happening. Okay.
Food prices are going up. That's what's happening.
You stay.
That's what it means.
Listen, man. You stay right there, folks. Andy and I are coming right back. We have the Dow finish up 19, Nasdaq down 13, S&P's up $1.50. We'll be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had, let's see, J.P. Morgan Chase was flat. You had Goldman up 73 cents. We had USB flat, and American Express is down 57. We got our man, Mr. Andy Hecht, and we're going to be talking with Frank from Lexington. Hey, Frank, what's going on? Frank, you there?
How are you? Yes, I'm here.
Great, man. How you been?
Oh, not too bad, thanks. Getting along. Spring's finally here, and, things are looking up.
That's perfect, man.
Yeah.
No doubt.
Hey, I wanted to talk about a bond fund, a bond ETF. The symbol is EIF. It's a 10-year bond fund. Excuse me, IEF. Sorry.
That's cool. Let's take a look at it. So you get the IEF, and that's the iShares 7 to 10-year Treasury bond fund, exchange-traded fund. The low for the year out here is 98. The high is 107. Right now we're at 102.86.
Can you see my question sticking out at you there from a couple of weeks ago?
I can, and it's a beautiful thing when you have what you have, folks. Is that 2 weeks ago, the week of May 2nd, you talk about volume coming into a swing point. We did 25 million shares. Now it got to a price point of 102.74. Your swing point is 102.83. When you start pushing into a swing with volume, guess what? You're going to blow it. Well, in this case, this is like intense volume, man. Someone not only got into this, they got into it like in a huge way, not in a small way. So, yeah, I mean, that's another indication that, guess what? This thing wants to go higher. You have the 103.40 next. What it has done is that when you see the correlation of how we came down last June, you know, this went from 107 to 102. You're into that by 86 cents. You know, when you get into another buck, you're really going to have some action. But I think it's a big trade, man. These bonds are going to blow everyone's mind, including mine. I mean, they want to go up, and it's like, what is pushing these bonds in a way that is exponential? But the bottom line, there's buyers, and there's huge buyers that are coming in, and they're coming in very quickly, man.
Good. Hey, if you have time, can you look at JO2 or copy?
Oh, we got the right man for you right here. It's a beautiful thing, Frank. Absolutely.
I'll hang up and listen. Thank you.
Okay. There you go, Andy. So he wants to look at coffee. I think you already made this guy a fortune, man. It's a beautiful thing.
Coffee 187. Let me see. Where you have the JO there? Because I can't put it up on my screen now. Where do you have that?
Wait, it's at 36.
36.
Now coffee, folks. Okay. When Andy started talking about it, the JO was at $22. You know, it had the big expansion. It's been going sideways to 41. It's been going sideways. It's like, okay, you know.
Yeah, it's quiet. I mean, you know, look. A lot of the crop in Brazil was destroyed. Very interesting today. I picked up a story. I saw something about Vietnam. Let me just find that for you. Coffee sales have slowed in Vietnam. The world's largest producer of Robusta beans has reserves which are 27% lower than last year. And the Brazilian crop is totally hurt here. So I think we're now in a corrective mode. We have good support at 175. I want to be a scaled-down buyer of coffee here on fundamentals, but the technicals, they look a little weakish here. It looks like we could go a little bit lower.
And the let me see. So KC, yeah, no, and that makes sense for the way that the baby went higher. You know.
No, 175. Hey, worst case 150. I don't see it below there at all.
And so looking at that JO, Frank, you basically that'll line up with the JO. We're at 36. It's like that can pull 34? back. They pull back 31.42. Which is not the end of the world either.
Worst case. Yeah. Now, without looking at your screen, what commodity was up the most today? Percentage basis.
I already looked. Sorry.
All right. You know, sugar.
Oh, I had nickel. Yeah.
All right.
Oh, yeah.
Nickel. Yeah, nickel's a runaway bull market. We all know.
And you can't trade
it's
nickel
based
anyway,
on.
though.
Well, you can LME, but you don't want to.
Yeah. Right.
You don't want to. You know, you get your head handed to you.
Oh,
you know,
look at this. Going to be a monster ABC up. Oh man, look at this trade. Oh.
Sugar.
Oh yeah.
I love sugar. I love the action. Look at the volume. It fits right into your technical thing. It's going at 20 cents.
It's A to B equals C to D is 20 cents and 5 pennies. 20.05.
It's going.
Folks, you got to see this volume that came in here today. Man, is this a monster. Wow. Look at that. Volume of 72,000 contracts. And we had already pulled back. This is a classic, man. We had pulled back. Look at that, man. Unbelievable. We pulled back to 1730. It had 74,000 contracts then. It tested that area with 43,000 contracts. Got down yesterday with 20,000, and then there's 72,000 today.
So let me change what I said. What commodity was up the most today? Besides nickel, it was sugar.
Yeah.
And sugar looks like it's going to follow through. It really looks good. Now, cocoa also looks good to me. Take a look at cocoa.
Okay.
Cocoa, we didn't get the high. Let me just get a chart.
Yeah, she made 3,000. Right. Where is she? Cocoa. This she is. Okay, she's at 20.
We didn't do a lot of volume today, but we're so oversold in this market here.
Okay, so she got back to 29. She hit, so first off, she hit the 3,047 mark. Backs off that area. Oh, I see what she's doing.
Correction's over here.
Yeah, look at that. Okay, so she goes into the sign of strength. So Cocoa had a huge sign of strength, folks, going back to January. We went from 2,600 up to 2,900 in 3 days. Had the correlation at 27.92. She comes back to 28.49, rejects that level. Now, oh, there it is right there. I see it. Okay.
Go back to 3,000, 30.50.
Yeah, I can see it. 30.36. Those highs up here, folks, were in April, have some beautiful juice, man. Yeah,
that's got to be the target. That's
so hey,
be the target.
let's talk about your webinar and
sure.
What are folks going to learn in your webinar?
All right, so what I'm going to do, first of all, I'm getting up at 6:30 a.m. my time to do this.
Oh my God!
Which is on a Saturday.
Oh my God! Oh, see,
keep me out of the poker room on Friday night.
But Saturday's a great day to do the webinar.
Yeah, absolutely. All right, because it's a day where the markets aren't moving, and we can kind of sit back and reflect on the week and the weeks ahead.
Right.
And that's why I picked that day to do it.
Nice.
It just makes sense. So this frigid winter depleted some key energy stockpiles.
Yes.
And I'm not saying there's going to be hurricanes this year. I'm not saying it because I don't know. You don't know. I don't know.
Exactly.
No one knows.
Right.
Okay. But one thing I promise you, there will be hurricane threats this year.
Yeah.
And hurricane threats this year are going to be more reflected in energy markets than in the past, I would say, 6 years. Particularly because of natural gas, the low inventory levels of natural gas.
Okay.
So, we are going to see these markets rocking and rolling. And I want to, go through the fundamentals and technicals for each of the energy commodities, and I'm talking about oil.
Yes.
Oil products.
Nice.
So refining products.
Yep.
Oil and heating oil, gasoline and heating oil, natural gas, coal. I want to take a good look at because of the Ukraine situation. I want to go through the fundamentals, the technicals. Then I want to look at what products are out there and what kind of structures we can put on with low risk, high reward using either ETFs, stocks, options on ETFs or stocks, or in some cases options on futures. So I'm going to give a couple of recommendations, and we're going to put that all together over the coming weeks, and for an hour and a half on June 7th, and I think it'll be available in archives for a couple of weeks after that.
It'll an additional 30 days, folks. It's going to be on your page.
And we also want as many people to come as possible, so we priced it right at $99, and you could use your Tiger dollars. And I think it'll be a very worthwhile session, and perhaps a very profitable session.
And folks, the way that you sign up for it, come over to our website at TFNN. You're going to see it right on the front page. Energy opportunities during the summer of 2014. It's hard to believe, man. In 3 weeks, it's June 7th, man.
And just a little highlight. If you pull up a natural gas chart, a long-term one, and you look at 2005 and 2008, hey, we got potential this summer for those kinds of moves.
Okay, I'm going to do that right now. 1 second.
Take a look at that.
NG1.
Blow your socks off.
NG1. Okay, so NG1 will bring it back 10 years. And let's see. Oh, look at this. Oh, my God.
Yeah, whoa, Nelly, right?
Look at this. So natural gas, folks, started in May at $6 and ended in October. It was 14. Then it went all the way to 15.78. Man, oh, man.
These are not such crazy prices. If you're buying natural gas in Japan now, you're paying those numbers.
Well, and then it did it again. In 2007, it went from $5.25 in September to $13.69.
Yeah. So this thing has a habit of doubling, and inventories are low. So let's get together and put on some trades. So if and when that happens this year, we can hit a home run.
Absolutely, Andy. Thank you so much. You have a great night, safe night. We look forward to the show on Thursday.
Talk to you Thursday.
You stay right there, folks. We'll come right back.
Andy, Tech's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. Okay, so what do we have out here? You have a test of the highs. We have that test on 598 million versus 781. You had the UK finish at highs last with a small this afternoon, 11:30 Eastern time. That is saying that yes, that can get up higher to that 68, over the 68, 73. We'll see, in fact, if that can handle it. The DAX in Germany, however, different ball game, and the DAX in Germany loves trading not like the S&P, but like the Nasdaq 100. I suspect the Nasdaq, the DAX in Germany has another high in place. If we go over to Asia, we take a look at Asia. What we have is this. We'll start with the Nikkei 225. That was up 2% last night. That little baby right now came off the bottom, and that looks to me like she's still in a retracement. The Nikkei is down from 16,320. We're at 14,424. She's been hammering this bottom at 14,000. Now, the Nikkei, when you pull it back, the Nikkei is going to be a buy, folks, okay? What the Nikkei had done from 2012 straight up to 2013 was go straight up. The Nikkei has been going sideways now for approximately a year. The structure, the way the structure is set up is that it looks to me like, you know, you get down to 11,800, you're going to have a nice buy in place, and it looks to me like the Nikkei is actually an ABC structure on the way up. Now watch this, because this is intense. When you bring the Nikkei back, and it goes back 30 years, what you have, let me put this on a quarterly for you. Actually, I'll bring it back. Yeah, I can bring it back 30 years on a quarterly. And what you have is this. The Nikkei had gone from 38,900 in 1990 all the way down to a price point of 7,000, 6,900. It tested that area with lighter volume. It took about a year to get that baby tested. Then what it did, wide price spread, accelerated volume off that low. You get a pullback into this 11,800 area. That is going to be, I suspect, a large ABC structure on the way up. It'll take out the 18,000. More than likely, you're going to see the Nikkei run to 20,000. So that'll be a 100% move. Now, what is going to cause that? It has to do, if we go over to the yen. It's all about the currency, folks. The yen right now is at 102.27, and we do take a look at the yen. When you put that on a much longer basis, what you're going to see inside the yen is this. The correlation is direct. The yen in 1985 was trading at 262 yen to $1. Now it's at 102. That's getting weaker. It was as strong as 75. It blows my mind, actually, that these large Japanese companies could actually stay in business. As that yen gets weaker, those industrials get stronger. That's what the Nikkei is all about, folks. The way that the yen is trading right now, so if we take a look at A to B equals C to D, you have 75 up to that 125. If you back down somewhere into the even 96, I don't think it's going to be a big back down. That'll get you up to the 123 area on the next run up. You know, we'll see whether it can make it over that. It doesn't have to make it over that for the Nikkei to go much higher. The dollar move is a big move. One of our tigers was saying the den a little bit early, and he's absolutely right. The bond move going up so dramatically, folks, okay, is putting strength behind the dollar also, because no matter where you are in the world, you need U.S. dollars to buy U.S. bonds. That's how it shakes out. What we did have happen last year is that the most amount of dollar bonds were issued by foreign companies and foreign governments. I suspect that's continuing, and what you see when that continues is that, guess what? Two different things have happened. You need dollars to issue the bond, then you need dollars to pay the interest. This dollar is going topside. When you wrap it all together, what I'm looking at is this. Dollar wants to go higher, gold wants to go higher, silver wants to go higher, S&P wants to go lower. Bonds want to go higher. The real key is going to be inside that bond market. So if we bring up the continuous bond in the 30-year, We right now at 135.28. 141 to 143, even though I'm a bull in bonds, is only a dead cat bounce. That brings it up to ice, just so you understand how this shakes out. That's a monster move, but that would be a dead cat bounce because we hit a high of 153. That high was generated in 2012. You got down to 127. Right now, what the bond market has done is a classic art of timing the trade. You had broken topside. We had gone topside for about 2 years, three and a half years. You pull back to the breakout area. The breakout area in the bond was 127.29. We got down to 127.21. Now what happens? You go topside again. The correlation of getting through ice is going to be a big deal. The closest number, because we're talking on a monthly basis, is approximately 142 to 143. My take is that we're going to make it there. The real key, once it gets up there, how do you trade into that area? You trade into that area with conviction. That would be saying, guess what? We're going to go up to the highs. You may even get a higher high. If, in fact, that's going on, go take a look at the 2011 charts. What is happening there is that a very fast move topside was when we were correcting downtown in 2011. The NASDAQ already started the correction. The small caps started the correction. The Dow is at highs. The S&P just tested its highs. When you take a look at the S&P, bottom line is that the pullbacks have been dramatic with monster volume. So when I wrap that all together, inside the S&P, by the way, information technology is the largest weighting. The second largest weighting is the financials, the XLF. When you take a look at the XLF today, XLF failed. We're at 22.13. She was running into the downdraft. Downdraft had 59 million shares. We did 29 million shares today. XLF got to a price point of 22.22. You closed under the low of under the high of yesterday, under the high of the last spike high, which is on the 2nd of May, under the last high, which was the high of the 24th, and that is saying that now this little baby is going to try to go south. If we take a look at J.P. Morgan Chase, she's one of the largest weighting structures inside there. Berkshire is the largest. I'll pull that up. J.P. Morgan Chase is down from $61 to $54. That already broke a B point of an ABC structure on the way down, and it's a complex ABC structure on the way down. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows, and whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right back here tomorrow. Go get it, folks.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pizzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
This is TFNN.